Welcome to Drill Down Earnings. We have the latest quarterly results from Smartsheet, a company very much in the news today. So check this out, the business story behind one stock on the move. I'm Chief Market Strategist Cory Johnson. Smartsheet earnings are out, second quarter earnings for this company. Wall Street likes a beat or a miss, and yes, this was a beat. But this thing was already in the news today because there's a report on Reuters, they had an exclusive, saying that private equity group of Vista Equity, as well as Blackstone, were working together to acquire Smartsheet for about $7 billion. That sent the stock flying in the early hours today before the earnings ever came out, saying the deal could happen in the next couple of weeks, assuming that it can actually get the thing done. They quoted sources with knowledge of the situation, which is good, because you wouldn't want to quote sources without knowledge of the situation. That'd be malpractice for a journalist. Nonetheless, shares up about 10% in the early hours, well before these numbers come out. So the numbers come out, what do we get? Well, we get a decent quarter, 17% growth to $276 million. Annual recurring revenues also rising exactly 17% to $1.1 billion. And a lot of operating cash flow from this business. And the company's sitting on a lot of cash as well. And creeping towards profitability. So they've been losing money for a long time, down to a negative 3% operating margin. So an interesting time for private equity come sniffing around when the losses might soon be behind this company. Now, one of the things they give us in terms of understanding how the business is working is they tell us how many customers are spending $55,000 a year and how many are spending $5,000 a year at the bottom end, and at the top end, $100,000 a year. And what we see is the biggest customers, all the customer growth is slowing, but the biggest customers are growing much more quickly than the smallest customers. Those $100,000 a year and over customers growing at 23%. So they're signing the right people and getting the right big deals done. And as a result, average recurring revenues are slightly outpacing the overall growth of this company. Another positive sign which might help them get to profitability, making it attractive to everyone, a little bit more at least, including private equity. How'd the stock react? Well, as I mentioned, stock was up, closed the day about 4%, added another 3% in after hours, but still up only 20% in the year, underperforming the S&P 500 average. But also in the midst of all this, as I always say, you can change the fan belt whilst the engine runs, but it's harder that way. Well, that's what they're doing. They're changing their pricing model with customers to get more aligned with what other companies are doing and bring in more revenues. And to the surprise of some of the analysts on the conference call, it's working. Customers are willing to sign up and pay for these services in the same way that other companies are charging for software, which is leading to higher revenues from every customer who signs up for this, which CEO Mark Mader called good news.
The good news is we're moving to a model which is conforming to how other software is charged for. So there really aren't a lot of, we'll call them sanctuary cities that you can go to where you can get the free opportunity. So we're confident that the value we're layering into the platform does resonate with people. The early metrics from these thousands of customers who have signed on, I think, was indicative of how the existing base will respond too.
So will these other customers continue to sign up for this higher price plan with a simplicity in billing? We shall see, but the company seems hopeful. But what's the one number that tells us a whole lot? The thing you want to remember about these earnings, I'm going to have the drill down earnings bites right after this.
The drill down is brought to you by Futurum Group, where analysts, researchers, advisors, content creators, and marketing experts help business leaders anticipate and understand shifts in their industries and build strategies to leverage disruptive innovation. With deep analysis, Futurum Group's extensive industry experience delivers reliable research and data, thought leadership, and actionable advice to help you with your strategy and go-to-market efforts. Futurum Group.
So Smartsheet, just reporting second quarter earnings. Here's this summary, which you really want to remember here. So $276 million, that's good, because the growth rate is remaining strong for this business of 17%. But that's not the bite. That's not the one number that tells us a whole lot. The number that tells us a whole lot is the operating losses. Only negative 3%, still losing money, but with growth rates strong in the top line and losses shrinking in the bottom line, private equity and others might be interested in this business, finally. All right, thanks for listening to Drill Down Earnings. I'm Cory Johnson. And you can check me out on Twitter or X, whatever you want to call it, at Cory TV. Leave me a comment, tell me what you think. If you don't want to do it there, go to Drill Down Pod on TikTok or Drill Down Pod on Instagram. I'll see your comments there. Follow us, like us, dislike us if you must, but tell us what you think.